What's going on, guys? Peter Zane coming at you via Marketfly and Benzinga. I want to give you the quick update for the options outlook for this week. Last week we had some pretty good action, as mentioned in the previous outlook. We were pretty much looking for a lot of chop in the markets. This week we had pretty much just that. SPY was bouncing back and forth. There's not really confirmation via the financials. All the components in general were relatively, I would say, subdued. The big movers, though, were the tech names. Google, Priceline, Apple, they were all moving all over the place, including Amazon, which we were able to snag a pretty nice trade out of. One thing, as mentioned before, is that, as mentioned about 2 weeks ago, we were looking forward to some summertime chop, and this is pretty much exactly what we've gotten. A lot of the techs are moving. Volatility is coming back, so what we do is we consider this a regime change. We went from slow and low volatility to higher volatility times. That doesn't necessarily mean that you're going to have an easier time trading. This usually means that market makers are actually doing a better job and having better luck gaming you guys, because volatility is up, making you guys buy higher premiums when actually there's no real move in the actual stock at all. And again, that's something we warned you of last week, is if you don't have any confirmation from your financials like Goldman Sachs, JP Morgan, Bank of America, and those names, you're not really going to get any follow through in your markets. And you've seen it already for the past 3 or 4 days. We've had ping-ponging SPY, ping-ponging VIX, issues over on the Nikkei, and the American markets don't even care. So it's all over the place. Honestly, there's not very much you can do here. Even on the writing strategies have been relatively tough. Friday we had a really nice ramp up actually where we could write a lot of puts, feel really solid about it. And but again, it's been relatively tough. Again, greater volatility doesn't necessarily mean a good market for options traders. You usually have to be in the pit, or you should be a volatility seller that requires you to have a larger account. Overall, again, guys, I would say that with the next couple of weeks, we're still going to see a little bit more of this. SPY may push for highs, juke out all the bears, and then pretty much dip even lower. I wouldn't be surprised to see some relatively new lows coming in the next couple of weeks here in the SPYs. But again, guys, I don't want to count on any short attempts here. We're still on a lot of chop. This kind of action usually takes, a total of like 3 to 5 weeks to really work itself out and then notch over into the next area of consolidation. Overall, my belief is that we're still bullish. The banks haven't really pulled back that much. They've been faded. They've gotten choppier, but that's really expected in the summer action. So again, guys, make sure you stay on top of it. Make sure that if you're trading anything at all, make sure it's moving without the markets, or at least leading the markets. Hold your positions for no longer than 20 to 30 minutes at most. If you can get a good scalp, use an at-the-money option to scalp, because again, you are already buying into higher volatility areas, which is not 100% tracking the movement of your underlying stock. You're not going to get that much follow through in your options. All right. So again, guys, this is your options weekly outlook. Make sure to catch us soon. This is Peter via Marketfly and Benzinga. Over and out.